righty, everyone. Let's go ahead and get this ball rolling. Just as a reminder to everyone, this is going to be recorded. So if you have questions, please feel free to reach out to Rory or Jen or Jeff or myself, anybody on the team. Be more than happy to do a follow-up call on this presentation, any questions that you may have. And then otherwise, we are going to be recording this and putting it up on our YouTube our YouTube channel, excuse me. So if you haven't already subscribed to that, please feel free to go on there and check it out. You know, we're trying to do more interactive content with our clients, just have some short snippets that we can put up on YouTube, just as overall educational pieces for them. So this is another presentation that's going to be up there very shortly here. I'm excited to be joined by Phil Villari here, who is a strategic partner of ours over at the Barclay Group right here in Riverton, New Jersey. So Phil, thank you for joining me here today. Good to see you.
Yeah, good to see you too, Shane. Thanks for having me. Very excited. Thanks to the whole Ausperity team. We really do value our partnership with you
Yeah,
guys.
it's been great. And this is a great topic, Phil. Obviously, you've done a lot of work for our clients in terms of sometimes last minute stuff, sometimes look ahead stuff, just with, home, auto policies, like insurance policies regarding umbrella policies for folks that have sometimes a secondary home, a vacation home, a rental property, whatever that may be. Us here at Ausperity, we are licensed in terms of life and health. So we are always able to provide solutions when it comes to, life insurance policies, term insurance, long-term care. But when it comes to the property and casualty side of things, we like to refer that out to strategic partners that we trust. And Phil, obviously, you are one of them. So we appreciate everything that you do for not only me, but the whole team here at Ausperity and our clients. We look forward to, again, working with you guys for a long time. And, this is your presentation, so I'm going to kind of let you kick it off here. But just for everybody's sake, I'll just let you know, most of these slides are going to be very kind of definitional and informational. Phil and I are going to talk through from a high level 10,000-foot view, some common questions, some FAQs, if you will, in regards to, what some of these things may pertain to a client, when I should be looking at these, how often should I be looking at these, things like that. So Phil, why don't you go ahead and kick us off, maybe a little background on the Barclay Group, and then we can jump right in.
Yeah, so myself, I was born and raised in Riverton, New Jersey, so I'm a local guy, and I've been with the Barclay Group for 10 years. I started out as a producer, salesperson here at the agency. Got my start in personal lines and commercial lines. Our agency writes both of those for our customers. We're about 65% of our business comes from commercial, 35% from home, auto, umbrella, and other ancillary coverages, and then 5% of it comes from municipalities, school boards, all public entities. But we've been around since 1945. Like Shane said, we're headquartered in Riverton, New Jersey. We have two other offices, one in Deptford, New Jersey, and another in Audubon. And the Barclay Group, there's two different types of brokerages or agencies that are out there. We are an independent agent. So what that means is our agency is appointed to write business with a number of different insurance companies, Selective, Hanover, Travelers, Utica National. So we've gained those appointments over our years in business, and good name in the space, as those appointments are difficult to come by. And the other side of the coin are your captive agents, who mostly relate to the state farms, all states, farmers agencies. Geico would be one of those companies where they're specifically writing on their own paper, and they may have a couple other outlets that they're able to use, but 95% of what you're getting with an agency like that is their brand, their paper. So sometimes it can be a little limited when you're looking to say, hey, my rates are up again. Do you have anywhere else to take us? So that's why it's great to work with an independent agent.
Yeah, so what that sounds like, Phil, to me is I think a lot of what we like to do for clients, and that's like an open architecture, right? So it sounds like you guys are able to shop the open market in terms of insurance policies, whereas, say, a Geico or somebody of that nature would just be writing you Geico policies. You can kind of see what Travelers is, what Geico is, what X is.
Exactly, exactly. So we've actually developed a software. So once you are a customer or looking to become a customer of the agency, we develop a software. We're able to put your information in, and it pulls with all the different insurance companies that are interested in writing your home, auto, based on the area you live in, how many vehicles you have, age of your drivers. So it really gives us a wide range of options to present, clients with.
Yeah, that's great. I mean, we operate the same way here, and that's one of the reasons why we love partnering with you guys is because you have the open architecture. For us, similar to investments, right? We can essentially buy whatever investments are out there for clients, but we're going to try and find them what we think works best. So I think that's great. And, maybe Phil, you can, from a high level, just talk about, I kind of alluded to it at the intro here, but just from your side of things, property, casualty, more so outside the life and health, what you guys focus on mostly at the Barclay Group there and what you help our clients with.
Yeah. So obviously everybody needs it, right? Auto insurance, homeowners insurance, renters insurance, and pet insurance. We know how expensive it is when your pet takes a tumble and tears their ACL. It's always good to have some pet insurance to fall back on. But grand scheme of things, and just looking at some of this stuff right here, obviously home and auto are our two leading products in the personal lines department here. And I think everybody probably on this webinar can relate, especially if you're living in New Jersey. Some of the letters that you've been getting from whomever your homeowner's carrier may be or your auto insurance carrier may be. We know inflation's been pretty prevalent in the U.S. here for the last 3 or 4 years. And there was kind of a lag time there in the insurance industry. So a couple years, and it was really related to a lot of the courts during COVID and after COVID. A lot of cases were put on hold, right? So a lot of those payouts or lawsuits that were being held up in the courts kind of skipped a couple years. And so 3 years later, everything opened back up. All those cases got settled, and the insurance companies were scratching their heads saying, wow, this really went upside down real quick. So, the market has changed over the last just year and a half. From an auto and homeowners insurance rate perspective. I pulled some numbers out, and pre-COVID, it's wild to say, the average homeowners cost in our area is about $1,200. Just earlier this year, study came out, the average homeowners cost in this geographic area is up to $1,900 for a home. So it's a massive jump, and it's expected to get over the $2,000 mark in early 2025. So there's a lot of people reading those letters that, hey, Selective or Travelers or Andover, hey, my insurance company's filed with the Department of Banking and Insurance for a 37% rate increase this year. Now, Department of Banking and Insurance really isn't granting those high of the increases, but they are coming back to the insurance companies with, anywhere from 10 to 15%. They're granting them access to collect that rate on those renewals. So we are just really focused on our customers. Are obviously concerned about that in the industry. So that goes back to the beauty of being an independent agent and having those different options to provide our clients with and say, no problem, we'll get it out to market and see what we can do.
Yeah, that's great. Obviously that's something that we're trying to deal with here with our clients in terms of inflation and rising costs. All clients that are on this call obviously know that everybody has a financial plan here at Ausperity, and inflation is one of the things that we focus on in terms of increasing those average costs, renter's insurance, homeowner's insurance, with inflation, even property taxes, right? Cost of living overall. That's one of the things that we increase with inflation, but a lot of times you're going to have years like these last couple of years, as you mentioned, Phil, where it's going to increase at a rate that's even higher than what inflation is. So these are all good things to know. I mean, $1,200 up to $1,900 in the span of 2, 3, 4 years is a significant jump, and it's something that we need to account for in financial plans. So, having the relationship with you guys and knowing these costs with clients, I think is certainly helpful. One of the questions I had, Phil, that I figured I could tee up for you is, even me personally, right? We're all getting this mail every single year. Hey, homeowners insurance getting ready to renewal time. Here's 4 different letters that you're getting from all the different companies. Auto insurance, same deal. How often are you telling your clients that they should review, say, home and auto policies?
Yeah, it's a great question. So we're really on a 3-year cycle, right? We feel like it's proper timing to take out and make sure that your products are still competitive from a pricing standpoint every 3 years. Now, there's going to be situations where, you had a claim and your rates increased substantially, but we'd say every 3 years is a good benchmarking point to just make sure that, your pricing is still competitive and there haven't been new coverage items that have come out that you're missing out on. I really think that right now, especially, this is really good for people to know, is the market is very difficult right now from a homeowner standpoint. And, we have customers that call us and, my homeowner's going up $400, $500, whatever it may be. And we go out to market and we move them to another company and, we cut the increase out essentially, right? But insurance companies are having such a difficult time right now in the homeowners marketplace that once a new homeowners policy is written, they are coming out and doing exterior and interior inspections. They only used to do interior inspections on high dollar homes. So they're really coming out and being extremely strict and going exactly off of roof's the number one thing, right? So a lot of our companies are not even writing new homeowners policies if your roof is, say, 10 years of age or older. And if it's in bad condition and they come out and take a look at it, the savings that we just gotcha, you're going to get a letter in the mail from the insurance company to, you're going to have to replace your roof, which has been very difficult. So going back to your point, in this market right now, if your home is not in tip-top shape, things are newer, mechanical equipment, roof, it's almost better to weather the storm right now and avoid having an insurance company come out and lift up every shingle and, take a look at every sidewalk piece out front of your house.
Good to know. Good to know. Definitely something that clients need to be aware of because, yeah, like you mentioned, it may end up actually costing you more than the simple $400 increase that you were expecting.
Yeah, no doubt about it. And that's going back to your importance of, updating the customer's plans, to stay in line with inflation. So.
Yep, that's perfect. So why don't you go into this, Phil, in terms of auto insurance? And, obviously we have a lot of clients that, not only need auto insurance, but more importantly, I think for a lot of clients, they have kids, right, that are sometimes covered underneath their auto insurance policies. And I always think it's good for them to know, kind of the difference in regards to auto insurance policies and knowing who's covered, what's covered, this, that, and the other. So how about you touch a little bit here on the full coverage and what that means for clients?
Yeah, so full coverage essentially, right? You have to insure your vehicle from a liability standpoint. So if you're involved in a motor vehicle accident and somebody is injured, your liability insurance is going to cover bodily injury to a party that's been affected in an accident and property damage that it is your fault as a result of the accident. So that's from a liability standpoint. That is mandatory. Now, full coverage is adding on comprehensive and collision coverage. And I'm sure everybody's pretty well versed in that. So if you lease a vehicle or you finance a vehicle, the finance company, the bank, whomever is your lien holder is going to require you to have comprehensive and collision coverage. If that vehicle is totaled, damaged, etc. That's something that your finance company is going to require you to have on the vehicle. So from all aspects, covering the liability to third party and your vehicle itself, that would be full coverage.
Gotcha. Yep.
Yeah. And this is going back to continuation of the auto insurance. Liability. So typically 85, 90% of auto consumers have split limits as their liability coverage on a personal auto policy. So if you're ever looking at your policy deck page, it says 100, 300, right? So what does that mean? Bodily injury to a third party, the first number is per person. So you'd have if it was $100,000 per person, the second number, the larger number, is going to be per accident, right? So that's your total aggregate limit for any one accident in a motor vehicle collision to a third party. That could be paying their medical bills, legal fees that are coming back to you if, God forbid, the accident was serious enough where the legal action is taken against you. 25,000, 50,000 is New Jersey's minimum liability requirements, which was actually just upped by the state of New Jersey early last year, 2023. It used to be 15,000, 30,000. So New Jersey made a push to have drivers out on the road carry higher limits than that 15, 30 coverage limit.
Is there a recommendation that you have typical for clients in terms of that number? Just do the minimum, or do you typically recommend clients go a little bit higher than that because it's, not that much of additional costs?
Yeah, we're not going to tell anybody to buy the state minimum limits. At a minimum, you should be carrying 100,000, 300,000. That's kind of why I use it as a reference. That's our pretty standard. People that are carrying a little bit higher, you have the next level up is 250,000, 500,000. And to actually purchase a personal liability umbrella policy, you need to carry 250,000, 500,000 auto liability limits. You cannot procure personal umbrella policy with auto limits less than that. And that really comes into play. So, and you went back to it. I mean, young families, teenagers, 16, getting their permit, going on to grab their license at 17. That's really when you really also want to take a look at these liability limits when you have young drivers out on the road. Because, there's a lot of distraction out there, and, you want to make sure, and you go back and look at this, if driving records are okay and claims history is okay, the jump from 100,000, 300,000 to 250, 500 is really minimal. It's just about asking to see that difference.
Yeah, no, that's great to know. I think that's something that, every person, every one of our clients most deal with, right? New drivers, and what should I be looking at in terms of the coverage that I currently have? And just like your financial plan, most things are not set it and forget it, right? Just because you were doing 10% in your 401k when you first started doesn't mean that you can just sit there and leave it there forever. Things are going to change. Family situations are going to change. So this, just like anything, is going to be something that we should always be looking at. And there's going to be different life events that kind of go into that. Phil, I'm glad you kind of touched on umbrella policies there, because that's something that we're definitely going to kind of circle back on. But in the meantime, why don't we go through home insurance, right? This is probably the number one thing I think that most folks think about, especially for our clients that typically, are going to have a main property, right? Their residence, and then sometimes we'll have either a shore house or they'll have a rental property, maybe down south or somewhere, even if they're renting out the shore house, and then sometimes even, a third property that they're having. So I think homeowners insurance is great here in terms of, what really goes into, that bucket of homeowners insurance, Phil. And, further than that, how often should clients be looking at it for not only their main property, but their investment property as well?
Yeah. So when you look at your homeowner's insurance declaration page, you're going to see coverage A, B, C, D, E, and F. Every homeowner's policy is structured the same way. So coverage A is your dwelling limit. That is your house, any attached structures to your garages, if they're attached. That is the total coverage limit you're going to have. God forbid there is a catastrophic event that happens at your house. They're going to pay you that limit to replace the house. Coverage B is other structures. So if you have a shed or a detached garage, that would be that coverage limit. And coverage B is always 10% of your dwelling limit, coverage A. So you're going to see how that math works out on the declaration page. Next below is personal property. So that's things you've accumulated over your years of life, right? So if you flipped your house upside down, everything that hit the roof would be considered personal property. Furniture, electronics, clothing, utensils, the small things that we seem to forget about. And that's always going to be either 70 or 75% of your coverage A limit. Okay? Coverage D is loss of use. So if, in fact, you have a claim at your house, fire, smoke damage, and it's going to take some time, for it to be repaired, and the home isn't really habitable for you and your family to live in, loss of use coverage would pay for you to find either a rental property in the interim or go to a hotel for a week while your house is being repaired and becoming safe for you to move back into. Coverage E is personal liability. This is a big one. Personal liability coverage protects you from any bodily injury or property damage done to a third party, right? So that one of the number one examples for this is, God forbid your dog gets out and, bites the mailman or bites a neighbor. But this personal liability is so important because it follows you wherever you go, right? So if you're a golfer, per se, and you got houses that are on the golf course and you hit a stray golf ball into somebody's backyard and you injure somebody, your personal liability will follow you. It'll pay medical bills, legal fees to that third party needed to protect you in the event of a lawsuit. And usually we see on a lot of homeowners policies, the carriers really try to stick you with a $300,000 personal liability limit, which is just too low. So $500,000 or $1 million, you should really be looking at. It's going back to the auto, the jump in the liability limit, pricing wise, is peanuts. And from a peace of mind standpoint, it's so valuable to all the assets you've accumulated and all the hard work you put in to building what you have today. So super important coverage. Medical payments. Medical payments is basically essentially a goodwill coverage, right? Somebody slips and falls on your property on ice, or your dog bites them, whatever it may be. The insurance company will say, you have a $5,000 medical payment limit. That individual had to go to an urgent care or the ER to get checked out. And that claimant or the person that was injured would accept that the insurance company is going to pay my medical bills and I will not take any further action against your personal liability limit. So those are the 6 base coverages of your homeowner's policy. And then below you have renter's policy. So if you're renting an apartment or your kids are away at school and they're moving off campus into off-campus housing, very important to have very inexpensive coverage that also includes personal liability and small amount of contents coverage or personal property coverage for things that you're bringing with you.
That's good to know. Yeah, I mean, you keep bringing up the dog bite, and it reminds me. I heard a story where, what is it they say about New Jersey? If your dog bites somebody, it's always going to be your fault, right? So yeah. even little things like that, right? It's just making sure that all of this stuff plays into your financial plan, because if you don't have these coverages, as Phil alluded to, that liability is going to go above and beyond, and it's going to come against your personal assets. So all the things that you work so hard for, Roth IRAs, personal properties, right? Those things are going to be, liable, right? When you don't have the coverage that is appropriate. So again, just like us visiting the financial plan every single year, this is something that we should be looking at every 1 to 3 years, as Phil mentioned. So that's great, Phil. This is a great one. I think this is something that all New Jersey clients, for the most part, think about, especially those that go down the Jersey Shore, right? Obviously, this has been a big thing since, let's say, 2008 when we got Hurricane Sandy, Phil. So, again, flood insurance, anybody who's been down the Jersey Shore knows that if you have to rebuild, if you're rebuilding a home, it has to go up on stilts, right? So, flood insurance. Talk to us about this and where, that kind of falls in and kind of plays a part in clients' portfolios here.
Yeah, so for any of our customers that own property down the Jersey Shore, they're pretty well versed in flood insurance and the National Flood Insurance Program, which is a government-run FEMA operation that provides all homeowners flood options for a coastal property. And like you said, I mean, this has been an interesting topic of conversation here at the office over the last 3 months over the summer. I mean, in this area alone, we're seeing weather events that are like we've never seen before in this area. I know just last week, St. Vincent, where I live, we got 7 inches of rain in an hour and a half. Of course, my basement flooded. I have 4 sump pumps. It can't keep up with that. And the actual definition of flood insurance is running groundwater from 2 adjacent properties away. So, a flood can build up pretty quickly depending on your grading. So, obviously, people that have a mortgage down the shore are going to be required to buy flood. If you're in a flood zone, AE flood zone or A flood zone, you're going to be required to buy flood. But for all of us living in the X flood zone, okay, which you're not required to buy flood from your mortgage company, have all seen these crazy weather events over the last 3 months, and we just had it last week. I mean, a ton of claims came in, and they were all deemed flood. Nobody has flood insurance. Now, for somebody to buy flood insurance that is not in the flood zone at their primary home in Morristown, St. Vincent, Riverton, Cherry Hill, wherever you're living, it's a great option to look into with your broker. So inexpensive if you're not actually in a flood zone. And the National Flood Insurance Plan, where most people have procured their flood insurance over the last 20, 30, 50 years, there's a lot of limitations on that program. So the private market for flood has recently opened up over the last couple of years. And it's giving consumers a lot more options, right? You were never able to get flood coverage to cover your basement, per se. Now there's some private markets that can add a sub-limit for flooding in the basement. So there's a lot of different options out there. And it's definitely something to talk to your agent or broker about.
Yeah, that's good to know, Phil. I didn't even think about that, and you're absolutely right. The amount of rain that we get in short period of times these days is certainly pretty crazy. So good to know. Again, for clients, if you have questions about this stuff, please feel free to reach out to myself, Rory, Jeff, anybody at Ausperity. Looks like we got, this is just another additional information about the flood insurance here, Phil.
Yeah, this is just the NFIP standard. So the most coverage you can buy on a single family home through the National Flood Insurance Program is $250,000. This goes back to my point about the private markets getting involved. There is no cap on how much flood coverage you can buy in the private market. So it's always a good idea, if you are shopping flood, have your broker visit the private market as well as the NFIP.
Perfect. Great. And then other insurance, you talked about pet insurance a little bit, but we also have a lot of clients, Phil, that have, boats, RVs, whatever it might be, life insurance, obviously we've talked to them about, and, maybe you can, address a little bit, but what are the other kinds of insurance that people should be thinking about as a whole when they're thinking about, hey, do I have all my T's crossed and my I's dotted?
Yeah. So pet insurance, we have a couple alternative marketplaces that we're able to go. And, it's just everybody, if you have a pet, you've gone to the vet's office and, talk about inflation. The veterinarian's office is quite expensive. Boats, motorcycles, and RVs. You see a lot of advertising with Progressive Direct on the boats, motorcycles, and RVs, and independent side, us, we have tons of programs that are able to protect those assets, your boater's liability, your motorcycle, and RVs. And then other than that, just a couple quick things from a homeowner standpoint. Jewelry riders, engagement rings, tennis bracelets, diamond earrings. If you've accumulated quite an inventory of jewelry over your time, make sure it's on your homeowner's policy as scheduled property, because every homeowner's policy caps jewelry. It's not treated as personal property. So if the house was burglarized or, you lost that piece of jewelry, mysterious disappearance, if it's scheduled on your homeowner's policy, there is coverage for that. So those are some additional things. And two other things I always like to bring up from a homeowner standpoint too. There's two really important coverages from a homeowner standpoint that people are really thankful to have in the event of a claim. And service line coverage is one. It's a rider that you can get on your homeowner's policy. It's very similar if you live in this southern New Jersey area. New Jersey American Water will send you their protection plan opportunity in the mail, right? Water and sewer mains that run down your street, once those lines fork off into your house, they're your responsibility. So if they get clogged, those pipes are old terracotta, they crack very easily if they haven't been replaced. You can get a rider on your homeowner's policy for $28, $30 for $20,000 in coverage to repair that line if it needs to be. New Jersey American Water charges, I think, on the plan, $30 a month. So it's something to take a look at, see if your homeowner's company offers it. And then if you have a basement, sump pumps. A lot of people are under the impression that sump pumps is part of their house. If it fails, if your battery backup fails, and you get water in your brand new finished basement, that it's going to be fully covered. Well, insurance companies realized how many claims rolled in from sump pump failures over the years, and now it's a separate coverage. So you have to buy limits outside of A, B, C, D, some of those coverage items that we talked about earlier. So it's always something to look at, especially if you have sump pumps in your basement. Make sure your sump pump failure limit is sufficient.
Yeah, that's great to know, Phil. I mean, I honestly did not know that myself. And also, I did recently get engaged as well. So the jewelry is something that hits close to home. I got to insure that ring and make sure there's a lot of things that you got to make sure are covered. And I think a lot of times the reason why we do webinars like this is because, not even of a fault of our own, we're just not thinking about all the things that can go into it. I mean, for instance, sub pumps is just something that I just learned right now. I did not know we're not covered by a homeowner's insurance policy. So that's great to know. And again, just another thing to make sure we're checking the box on. So here's the New Jersey no fault laws. Maybe you can just quickly talk about, hey, what's obviously a lot of our clients are New Jersey. What kind of falls into this category?
Yeah, so no fault in the state of New Jersey means medical coverage for injuries resulting from a car accident are always provided by your own insurance company. Regardless of who's at fault, there's always a lot of finger pointing going on there, or whose car you were riding in. So there's always a coverage option that you have on your personal auto policy, and that's full tort or limited tort. So full tort is a more expensive coverage, and you'll see why. Limited tort restricts your rights to sue another at-fault driver for non-economic damages like pain and suffering, unless that injury qualifies as permanent disability or disfigurement. Full tort coverage option doesn't restrict your right to sue that at-fault driver for any of those reasons. So we always try to get people to purchase the full tort because you never know what's going to happen. And that limitation, I've had cases where it's come into play multiple times. And customers, unfortunately, like I said, full tort is going to be a more expensive coverage, but it gives you more access to go after an at-fault driver, for mental anguish and soft tissue injuries instead of the catastrophic events like limited tort will.
Gotcha. Good to know. Good to know. Yeah. Again, a lot of this stuff, Phil, I think is just, hey, we're more or less hedging our wealth. Sometimes it's going to be an additional cost to you, but you're going to be thankful that you have it if something ever does. Hopefully it never occurs, right? God willing, everybody lives and safe and no floods and no sub pump damage and no car accidents. But the fact of the matter is these things are a part of life, right? And, a lot of times if you're not covered in the right way possible and you're not taking a look at these things every, 1, 3, 5 years, unfortunately they can set you back sometimes. So, Phil, thank you for joining us here today. The one thing that I just wanted to touch on really quickly at the end here was, just overall umbrella policies, maybe really quickly before we wrap up, and I can see what kind of questions we have. You can talk about just in a personal umbrella policy and what that can help clients with in terms of just overall coverage.
Yeah, absolutely. So personal umbrella policies basically is an added layer of protection that will sit over top of your base liability limits. So it'll sit over top of some of the auto liability limits that we touched on, right? You need to carry $250,000, $500,000 auto liability limits for your $1 million, $2 million, $3 million umbrella to sit on top of it. Coinciding with the homeowner's policy, the umbrella would sit on top of your personal liability there. So you buy umbrella limits in $1 million cycle. So $1 million, $2 million, $3 million, $4 million, $5 million. We have customers that carry $10 million and $25 million umbrellas. From a peace of mind standpoint, and clients and people that should be looking at this are ones with young drivers, with multiple investment properties, with a swimming pool, with a dog, like we talked about, or anybody that's really a high net worth individual. Like we touched on earlier, some of these added layers of liability protection are so inexpensive, but a lot of people just have never asked, right? So it's time to ask, and I think you'll be pretty surprised at, the actual cost for that peace of mind that you can purchase.
Yeah, I think that's the biggest thing about it, Phil, is just folks just don't realize how cheap you can get it sometimes. And the way I look at it realistically is like a safety net, right? Your coverage is going to cover all the way up to here, but God forbid something happens. If you don't have that umbrella coverage, you're falling off the cliff, right? And now everything is at, risk, right? Exposure, right? There's going to be things that they can come after in order to make themselves whole, right? Whereas when you have that umbrella policy and, you get to that cliff and you fall off, there's a safety net there to catch you, right? There's another bucket of money that can be utilized to help pay creditors or whatever it may seem. And a lot of times, Phil, we talked about it, right? It is so cheap, and clients, sit there scratching their heads if they fall into this situation like, oh my goodness, I can't believe I could have had it for this cheap yearly. And now all of a sudden I'm stuck having to sell, an investment property because I'm getting sued.
Yeah, and it goes back to we had a chief underwriting officer for a selective insurance company in our office a couple of weeks ago, and from a liability standpoint, and he was talking more commercial, but it's relatable to home and auto as well. social inflation and nuclear verdicts. Typically in the past, right, an attorney or a lawsuit involving a lawsuit with a claimant against you, they're only going to sue you for what your insurance coverage is, right? That's what they think they're going to get, and that's a lot of people's mindset. Well, they're not going to sue me for any more than what my insurance company will pay them. But the courts have been handing out these verdicts and the juries, and a simple broken ankle, slip and fall used to be $50,000 and open and shut case. Now people are asking for a total life package worth $500,000 because they can't go back to work. And unfortunately, the courts are, they're siding against the insurance companies, and it's hurting policyholders out there. So it's even more important time to take a look at, purchasing an umbrella policy.
Yeah, agreed. I always brings me back to that McDonald's case where they had the guy sued for the coffee being too hot, right? It's just the littlest things now people, can unfortunately sue for. And a lot of times, like you just mentioned, Phil, they can be rewarded for them. So, having that peace of mind, us as advisors, we want to make sure you're protected in every way. And that's one of the ways we do it is not only, through the financial plan and making sure we're keeping track and keeping up with everything, but also on the insurance side of things, the liability side of things. We got to make sure those boxes are checked. And a lot of times we're using Phil and his team to do that for us. So Phil, thank you so much for joining me. I really appreciate this. I think this was extremely informational. I learned a lot of new things here, even myself. So thank you for joining us. I don't know if you have any parting thoughts, but for folks that are on, please, if you have any questions, feel free to email myself or anybody on the team. We're more than happy to make an introduction to Phil and his team if you want to take a look at your current policies. But other than that, like I said, Phil, that was great.
Awesome. Thanks, Shane. And if our agency cannot help you out and can't find alternative options that are competitive with yours, we're happy to make suggestions to really, secure your assets and your risk management.
Yeah, and one of the things that I appreciate with you guys as well is always that, if clients of ours who have wondered about this, I've taken it to Phil, and Phil has told me quite honestly, listen, I've looked at the market, this is a good policy. Don't do anything, right? We're not going to change just to change the same way we do it for clients and their assets. We're not just going to change for the sake of change or because we have a preferable carrier that we want to deal with. If you're, good with what you have, we'll leave it as is, but at the very least, like I mentioned, we're checking the box. So thank you, Phil. Enjoy the rest of your week. Have a great Labor Day to you and to everybody that's on the call. And we'll look forward to seeing everybody on our webinar next month.
Thanks, Shane.
Thanks, Phil.
See
you, everybody.